Ever wonder how a $20 billion deal could change the future of your internet and maybe even your investment portfolio? Picture this: Verizon, one of the biggest names in telecommunications, is making a bold move. They're buying Frontier Communications for $20 billion, including debt. This isn't just a deal, it's a game changer that could reshape how we connect online. Verizon and Frontier together will have a combined reach of 10 million fiber customers across 31 states and Washington, D.C. Let's break down why this acquisition could be a huge opportunity for you as an investor, what's happening and why it matters. Verizon wants to grow its fiber network, and buying Frontier is a big part of that plan. With this deal, Verizon is getting an even bigger footprint, expanding its coverage to millions more homes. Think of it as a huge power-up in a game. Suddenly Verizon can reach a lot more people much faster. Frontier's existing network adds 9 to 10 million fiber passings to Verizon's coverage. With this acquisition, Verizon aims to strengthen its position in the fiber market, providing ultra-fast internet that can handle everything from streaming and gaming to smart home connectivity. What do you think? Does this kind of expansion make Verizon a company worth investing in? Let me know in the comments below. Now, let's dive into how this growth opportunity could play out. Verizon isn't wasting any time. They plan to add up to 650,000 new Fios passings each year. But with Frontier's assets, they could ramp that up to over 1 million annually. That's a lot of new homes that could soon be connected to Verizon's fiber network. They're also making their existing service faster. Frontier's network will merge with Verizon's Fios, upgrading many cell sites from 1 gig to a super fast 10 gig capacity. This is all part of preparing for the future of 5G, AI, and the Internet of Things (IoT). These technologies are the next big wave, and Verizon wants to be the company that makes them possible. If you see the potential in this kind of technology-driven growth, hit that like button so we know you're excited about the future of connectivity. Now, let's get into the money side of things. Financial insights: the money behind the deal. Verizon is paying $20 billion for Frontier, which includes its significant debt. This acquisition isn't cheap, but it's a strategic investment. Frontier has about $12 billion in debt, which made it a target for acquisition. For Verizon, it's like buying a fixer-upper with good bones, but needing some love and a lot of cash to unlock its potential. Verizon expects to save $500 million per year by combining their operations, something called run rate cost synergies. The deal is expected to close in 18 months and has already received shareholder approval, with 63% of shareholders voting in favor. This move isn't just about expanding, it's about cutting costs and creating long-term growth. If you want to see more detailed breakdowns of deals like this in the future, comment below or subscribe for more investment insights. Ready to talk risks and rewards? Let's jump in. This is a classic risk versus reward scenario. Verizon is spending a lot of money and taking on a lot of debt to acquire Frontier. The risks include potential integration issues and the challenge of absorbing Frontier's debt. But the rewards: expanding their customer base, reaching underserved areas, and increasing revenue streams. There's also the question of regulatory approval. Whenever big players merge, regulatory authorities might step in and slow things down or add restrictions. And let's not forget about competitors like AT&T and other cable providers. They won't just sit back and let Verizon take the lead without a fight. Are you a risk taker when it comes to investments, or do you prefer safer bets? Share your approach in the comments. I'd love to hear how you assess risk and reward. Now, let's take a broader look at how this move shakes up the industry. This move is shaking up the whole telecom industry. Verizon wants to make sure they're not just a player, but the leader in high-speed broadband. By buying Frontier, Verizon becomes a giant in the fiber world. Think of it as a game of chess. Verizon just made a big play. Now other companies, like AT&T or Comcast, might have to look for their own acquisitions just to stay competitive. This could create a domino effect of mergers and acquisitions, which means more opportunities for savvy investors keeping an eye on the industry. If you think this kind of competitive shakeup makes the market more exciting, give this video a thumbs up. Let's move on and talk about what it all means for competition and consumers. Whenever big companies combine, it can lead to better services because they have more resources. With Verizon's money and technology, they could improve Frontier's service and make it faster and more reliable. This is especially good news for customers in underserved areas, like parts of the Midwest, California, and Texas. But there's also a downside: less competition can lead to higher prices. With fewer competitors, companies don't have as much pressure to keep prices low. It's a trade-off: better service, but maybe at a higher price. Do you think better service is worth potentially higher prices? Drop your thoughts in the comments below. Let's keep going to see why this valuation was so debated. Verizon's offer of $38.50 per share was 43.7% above Frontier's 90-day volume-weighted average price VWAP. That's a big premium, but some investors still thought it was too low, arguing that Frontier's potential in the fiber market made it worth much more. However, 10 of Frontier's top 12 stockholders eventually voted to approve the deal, and 63% of shareholders gave it the green light. This kind of valuation debate is a key lesson for investors. Knowing when a stock is undervalued or overvalued can make a big difference in the long term. If you want a deeper dive into understanding how to value stocks and mergers, subscribe and let us know. Key takeaway: Verizon is playing the long game by expanding their fiber network and reaching more homes. They're looking to grow faster and capture a bigger piece of the broadband market. This could mean bigger profits in the long run, which is great news for shareholders. If you're an investor who likes to bet on long-term growth and doesn't mind some risk, Verizon might be worth a closer look. They're taking big steps, but those big steps come with big risks if they can make it work. This could be a golden opportunity for investors. Does Verizon's strategy make you confident about investing in them, or are you more cautious about big mergers like this? Drop your thoughts below and let's discuss. This deal isn't just about connecting more homes. It's about shaping the future of high-speed connectivity for investors. It's a chance to be part of a company that's growing, expanding, and pushing for bigger market share. It's risky, sure, but that's what makes investing exciting. The rewards are there for those willing to take the leap. Whether Verizon manages to pull off this big gamble or not, one thing is clear: they're not afraid to make bold moves to lead the future of the internet. If you enjoyed this breakdown and want more content like this, hit that subscribe button and turn on notifications. We're here to help you make smart investment decisions together. Thanks for watching.